I'm in.
Oh my.
Oh shit. I guess that was worth sticking around for.
Maybe some slides.
Meta's been doing it too.
I really just wanted to scalp it, but
Are you still?
Are you still in?
yeah, I'm still in.
Oh.
But I was trying to scalp it, but I'll stay in
I'm
with
looking
you
to
guys.
sell you.
Oh my God. Whoa. Yo, AMD about to
Alright, I still have.
No, I be careful. Contracts in the move right there. Yeah, I still have.
Back on my young, made a bunch of this. Watch me thumb through this, keep it blunt of it. You know how I come when I come through this. Got the screech in the lock, I ain't come to this. Got the ball in my hand, I can't fumble it.
Stop loss orders. So there's two stop loss orders, right? There's stop limit and there's stop loss. Stop limit is just like a limit order. If you put a stop limit and it skips over your price, it won't sell. Stop limit order, let's say you have 220, right? And that's your stop loss for your stop limit order. And it goes from 225 to 215, it's not selling you because it never touched 220, it just skipped over, right? Stop loss orders, if it goes from 225 a contract to 215, it's still gonna sell it. It passed your number, it's selling. Right? That's the difference between stop limit and stop loss. So stop limit is a little dangerous. Some of you will put a stop limit and just walk away. If you walk away, you might come back and still be in that position and be down 40%. You were only trying to be down 10%. So stay away from stop limit orders. If you're going to do that, just set it at stop loss. For the most part, it'll fill you right at around that exact area, if not a couple cents away.
Contracts that we trade, do you have like based on your experience, like a set profit expectation you have on a contract, like 30%, 40%? I know it can vary based on the day of the week, but like.
So how I look at it is not based on percentage. I look on the stock and how much room it has. So if the stock, for example, is, the room on Nvidia, I told you before I got in, 147.77. That's the expected move I have for the stock. Whether I get paid 20% for it, 30, 40%, I don't really care. I'm gonna have to take profit at that number. That's my target. Now I know mentally, because I've been doing it for a while, how much I'm gonna be up when I get to that level. I'm very happy to announce my first in-person bootcamp of 2025. Now, I don't know if it'll be my last, but what I do know is it'll be hosted between February 2nd and February 7th, almost a full week with me in person. Traders always ask, can I be a beginner or can I be an advanced trader who's been trading for years and come to these bootcamp? Yes, we go through every single thing from A to Z. We start from the very beginning as if you had no idea what was going on, and we work ourselves all the way to advanced for traders who have been trading for years. And the best part about it is every single time we host a boot camp, we see the crazy progress in these students over the next 6 months. So I'm going to leave the flyer up for more information. If you guys have any more questions, make sure to DM me on Instagram. And if you'd like to register, I'll leave it down in the bio or down in the comments for you guys to register through that link.
So from my experience, I find most profitable, I make more money when I am in the market with 9:30, let's say. Like within 30 minutes, 1 hour.
Yeah.
And if I overtrade more than 3 trades, I lose money.
Correct.
So my point is, implied volatility does play a high role on this, because then later on, like let's say 11 o'clock, 12 o'clock,
Yeah.
even though I want to trade, even though I lost money,
Yeah.
but then implied volatility is not there. It's not that volatile. The point is that there is high probability of losing money.
Yeah, so the reason why I kind of stopped trading after like 11 a.m., very rarely you'll see me stay there, is because one, implied volatility is decreasing, meaning, the contract value is losing value. So I don't want to be in a trade, before a trade, that's great. While I'm in the trade, I don't want implied volatility to come down, because that means my contracts are losing value whether we stay in the same price or not. Implied volatility controls the price of the contract. I don't want to get too much into detail about it because we have a whole separate thing for that. But that's the reason I cut off at 11, because I don't want to be in those trades after that. And you don't get the type of volume you get between 9:30 and 11 after that. So like from 12 to 1, if you notice the volume, try to do the math on the type of volume you get from 12 to 2 and 9:30 to 11, day and night. So I want to be there where all the volume's at, but I obviously don't want to play the first candle of the day, right? I want to be where the most volatility and liquidity is at, so I can be in and out my trades and get paid for it and walk away. Day 2 of, I was gonna say the Miami boot camp. I'm kind of stuck in Miami, New York boot camp. I don't know what that was, but the Wi-Fi is giving us some issues, so hopefully they can fix that in the next 9 minutes, and then we'll be good. My hands are wet. It was the first one. It was a good day. What's up, guys? Good morning.
How are you?
Good.
You guys hung last night or what?
Nah, I focus on sleep. They went out. So first of all, the trade that we took today was Microsoft. Obviously, we all took it together. The reason I took it is because when I chart, I always start on the bigger time frames and then I work myself to the lower time frames. So why do I start on the bigger time frames? The bigger time frames give you the bigger moves, right? So, you know, like how they say it, you know, on the bigger scale, like when you look at the bigger picture, that's when you see what's going on, like with the actual stock. If you see something on the 5 minute, it's not going to react or make a big move because it's only happening on the 5 minute. That's like the smaller picture, right? That's cool for a scalp. Those are the trades we kind of get to have every single day. We find the smaller time frame trades and we take advantage of it. On the bigger time frame trades, it's very rare that we get these trades, right? Because it takes a long time to develop. When things take a long time to develop, when they finally happen, you get the big move, right? And we finally got the big move. Usually, I don't play stuff like Microsoft. You see me when Frankie takes those trades on Google, Microsoft. Those stocks I kind of stay away from. One, I'm not too familiar with them, and two, they're just not a Tesla, right? I like sticking to stocks like Tesla because I've been trading it since I've started, right? So first of all, bigger time frame on the 4 hour here. You guys can see there was a downtrend here. How many points of rejections do we have? 1, 2, 3, 4, 5. So we've had 5 rejections. So when a lot of people make trends, they always find like 2 points, 1 point, and they think it's a downtrend or uptrend. These trends are not an actual trend unless we have 3 points. Yes, they look good on the 2 points. Sometimes we can take it when it only has 2 points of rejection. But really our target to really make sure this is a trend and it's something that it's going to respect when it gets there is minimum 3 points. So I like to use a 3-point rejection before I take a big trade like that. So we've had 5. So that finished the first confirmation. First confirmation was the bigger time frame. The second confirmation was we had 5 points rejecting at that trend line. So showing me that that trend line is something that the stock is respecting, and it's going to respect it when we finally break, right? So it's telling me, okay, I showed you multiple times that this trend is real, rather than a trend that kind of breaks a little bit, comes back down, breaks a little bit. I don't like those because technically that trend is not valid if the stock can't respect the candles can't respect it on the time frame. So here it is. We opened above, right? These are my favorite. Rather than breaking through during the day, right? We opened above this morning. So why do I like when we open above rather than breaking through during the day? Multiple reasons to that. The first reason to that is because when you have a break during the day with a trend, if you're looking on the bigger time frame, it's the 4 hour, right? For example, that 4 hour can still have a candle close under that trend. So now I got to deal with the BS of breaking out. I think this is the big breakout. Market gets slower, pulls back, and now I have to deal with the candle coming down and it closes under. Now it's technically another rejection on the trend line, right? That's the first reason. The second reason I don't like taking things that are under the trend, it's a lot harder to break a bigger time frame trend than a 5 minute trend. You know how we joke around a lot, we break trends? That's the 5 minute, the 15 minute, maybe the 30 minute. But on the 4 hour, it's a lot more volume needed, a lot more volatility, a lot more, or different catalysts that can come into play that'll, not have or not help your trade break out. So I like that we opened above, right? The first positive thing or the third positive thing is we opened above right below a 420. So why 420? 420 is also a psychological level. So for me, we have a key level. We did break by like 10 cents, and I found a place to take an entry, right? If we open, or let's say the high or the open was at like 420.63. That would have been kind of a random spot to take a trade. It would be just another high to take it, and I would be like, okay, this isn't the best, but I'll still take it. So this ended up being right at 420, which was perfect because you have a whole number, psychological level, and it's a key level on Microsoft. So this opened at 420.10. Now, the first key point I'm going to look at when the market opens is, do we go straight up? If we go straight up, yes, I may want to take that trade just because I don't want to miss it, but that's technically chasing. And then I have to deal with the IV decreasing as I'm in that trade. So there's 2 reasons why I don't want to take it right off the open. One of my favorite tools on my partner broker Moomoo is it allows you to automate your trading. How, you may ask? Well, one of the coolest things that I like looking at in the morning pre-market is look at simple things like double tops and triple tops. Well, I always look at the same stocks over and over because those are the stocks that I'm used to trading. On Moomoo, you can filter certain things, for example, stocks that are having double tops, stocks that are having triple tops, and a lot more than that. And what's cool about that is, 1, you do less research for the stocks that you normally look at, and 2, you get to see new stocks that you never were to look at before because of Moomoo. That just shows you what the future of trading will hold and what AI can really do for trading.
The average trader, like out of 10, only one makes it, something like that, like the stats at 10%. Obviously, if you pull like a room of people like us, we're training and studying it up, like in your experience, you think the number's a little bit more in our favor, or like is it really 10%?
So that number is based off anybody coming into the trading industry. Like trying to be a doctor without going to doctor school for 8 years, what's gonna happen? Are you gonna be able to do anything? No. So the thing is, people don't spend enough time with trading. They don't treat it like that. They treat it as if they're coming in to make money. This isn't a job. If you're looking for a job to make money, a consistent amount of money, go get a 9 to 5, right? And there's nothing wrong with a 9 to 5. You know what I mean? George was making $200,000 a year before he quit working, and now he trades full time. So he had a great 9 to 5. You can find great 9 to 5s, but you have a consistent salary, and you're not losing on your net worth any day of the week. For me, my net worth can move up and down throughout the day, right? People come into trading thinking that they're gonna make consistent money, and they come in, they get too aggressive, they blow their account. Boom, lack of motivation. You're not gonna paper trade to learn for the rest of the year, right? Nobody has that motivation. They don't see real P&L. It's not gonna motivate them to wake up in the morning and actually try. So people come in, lose money, because they're not trying to learn, they just wanna make money, and then they get out of it very quickly, right? Because the goal at the very beginning is to stay flat. Your goal is not to make money. But if you don't have time where you need to make money now, this isn't for you, right? And when you come in, your goal is to stay consistent for a couple months, whether that's your account going up, down, just fluctuating. Because during those 3 months, you'll accumulate so much knowledge, and you'll understand, yo, that's why I lost money here. That's why I made money. Why did I do this wrong? At least you have capital to work with throughout those 3 months, and now you have more knowledge to work for or use for the next 6 months of trading. People don't last that long to accumulate that type of knowledge because they blow it right off the open, and now they have no motivation to paper trade and learn on their own because they're not seeing real money. Good morning. That was what was that? That was 20%. I don't think I hit 20% for myself. W's in the chat. Nvidia actually trading us right for the first time. That's why I took this trade, because this candle broke above, closed above on,
So it's
what is this?
time frame, and the next day is okay.
On Tuesday, no, on Monday. This is a Monday candle right there. The ending of Monday, this closed above. That was the first close above we've had the whole time on that 4 hour.
Okay.
You get what I mean?
Yep.
Today we'll go over some tape reading. We'll start off with some basics, get into more advanced, and then we'll follow up with Maki right after me, and he'll be teaching more of the supply and demand zone.
Why try to sell there, and why not let it go a little bit higher? You get a better price.
The psychological level that you're thinking of, how many people, you just thought of it. They know that.
Yeah.
All right, so just how you thought about it, oh, this is going to go higher, they want this. No, they don't. They want to trap you. They want to get you out of your fucking position, shake you out. You know, does that make sense? So just how you thought about it, they're thinking about everything that you can think of. Anything you thought about it, they thought about it 10 times over.
Let's say there's 200 million shares trying to be sold in this area. It's the supply zone, right? Supply zone means we need to eat up all of that supply to increase in price. If we only have 100 million worth of shares trying to be bought at that level, and there's 200, we're going to keep having sharp moves to the downside because the amount of shares trying to be sold is overpowering the buyers, right? More supply than demand. Now into the demand zone, when it's at the bottom, that's the demand zone. Basically what you guys look at as support. It's an area of where buyers are standing, right? So if the buyers have 200 million that they're trying to buy and the sellers can't have or can't match that, you're gonna have an increase or a sharp move to the upside because the buyers are overpowering the sellers.
I just sold the 200 this rush hour. Was determined to buy me a bus down. Back in school, I was serving the bus driver. He was talking, now he got a husband. Put the gas to the floor and I put out.
Before market even opened, it's up 40 for the day. The reason that first trade I wanted to take at 245 was the high. I was playing it into the high. There was not much special into there other than a psychological number at 245. The reason I didn't take it off the first candle is I told you guys the first candle of the day has the highest IV. IV has to settle, right? So that's why I wait at least 1 minute. The problem also to add into that high implied volatility is also we just had earnings. So implied volatility is through the roof. Expected move for the week is no longer that $30 move that they had expected at the beginning of the week. It's now $45 because we moved $25 overnight. So that first minute, you're getting implied volatility moving insane. That's why your contracts are just going to be jumping 10%, 20%, down 20%, up 20%. So that first candle, you don't touch. On earnings specifically, there are times where you can take trades the first couple of minutes of the day. Like today, I took it on the first couple of minutes on Tesla just because I know how to play this stock. But 99% of the time, do not play stocks that have earnings in the first couple minutes of the day, especially the first minute. It makes zero sense to take that type of risk, and we can just wait for another psychological or key level at 250. In my case, I let that first candle go. It had a green to red. Contracts got fucked. A couple minutes later, you had this recover ahead of the market showing divergence, stronger than the market. I was explaining at the beginning. Those are my favorite type of plays. And then you're coming into a key level, and we have a catalyst that it beat earnings. All those things come into play on why I want to take Tesla. Ended up signaling at 245. Obviously, I didn't get filled because of the Wi-Fi. Most of you guys did, or all of you guys did. And this pushed into 250. And yeah, I mean, I ended up taking that other trade at 250 break, and this pushed up to 252. But that last trade of the day here, I was explaining it, so I'll explain it one more time. That 249.83 level was a level that we kept getting stuck at on the 1 minute. We keep rejecting, we keep rejecting, we keep rejecting, and it was the previous key level or previous high that we broke before, and it pushed and then rejected off that 251 and change level. So I kept waiting. I told you guys once I see it at 249.83, I want to see how it reacts, not an entry, right? It's great, whatever, like 249.83 is a good level, but I still need more confirmation behind that. We break it, it pushes off that 249. You see insane volume. It was 800K in volume when it broke that 249.83, showing the confirmation that 249.83 was the right level to look at. If nothing happened there and there was no volume at 249.83, then all it's saying is what I was looking at is wrong. So where is the key level that we're all seeing together as a whole? All right, point 1, point 2, it's rejected multiple times there, but we'll count it as one as a whole here. And point 3, so we have 3 points at that resistance, showing you that 265 is a very fair level to look at as a bigger time frame resistance, right? Where did we end up playing it today? The first time wasn't at 265. The second time we ended up playing it was at 265. So why did we take it at 260, 261? So now this is where we find, remember we can't find exact entries on the bigger time frame. We can only find an area at that point, and then we judge it by intraday setup. So we start on the bigger time frame, then I move it down to the 4 hour. All right, now going to the 4 hour, can I judge and make a decision that I'm going to be playing this at 260, 261? Not really, right? Like I don't see anything that's telling me any answers that 260, 261 is, you know, an earlier entry that I can get. So let's keep working down. The 1 hour, do I see anything? No. Still, the bigger time frame is what we have, and that was 265. Now let's go to the 30 minute. Obviously, these are new highs this week, so it's not going to tell us anything there. Then we go to the 15 and 5 and all that good stuff. Now, coming into today, why did I end up taking 260, 261? Well, the momentum was there. Divergence in the morning market was pushing. Tesla got ahead and started ripping. I wanted to get in early, but I felt like I was chasing. And when I say chasing, it technically wasn't chasing because my key level was there. It's just the problem, you have so many green candles that a pullback, which remember, things don't go straight up and straight down, a pullback is very normal. But when you have something that goes up that much, a pullback that you might feel like hurts you is pretty much normal based on, if it moves up $5 and pulls back $1.50, there's nothing wrong with that, it just hurts, especially on a Friday, same day contracts. So you have to find a very precise entry, especially coming into this level. So the high pre-market was 260, 261. Today, that 260, 261 was nothing special but a pre-market high. But I was using divergence with that, I was using momentum, and I was using volume. Everything of those, or all 3 of those were confirmations. The only problem is, 1, it's Friday, same day contracts, very risky, so you have to go in lighter. Second thing is, those pullbacks are gonna hurt. But we took advantage of that opportunity and we made the best of it. 265 is just the bigger time frame level, and we've been talking about it since earning happened. The final day of boot camp.
Teslito way.
Teslito way.
Ese way.
Ese way. We finished in what, like 5 minutes up?
Yup, light as ever.
It's a long day at work.
One and done.
How are you?
Appreciate you. You as well. New York.
I literally have your
Nour. Yeah. Council. And
going?
I coach outside that.
Chilling. All the week.
Good.
How was it, bro?
Good, man. Yeah, dope, man. Shit was complete, you know. Like, solid.
Feel it?
Yeah.
You had a good time?
It was great. Better than med school.
Trading with the GOAT the whole week. That was great, yeah.
Back on my young, made a bunch of this. Watch me thumb through this. Keep it blunt of this. You know how I come when I come through this. Got the streets in the lock, I done conquer this. Got the ball in my hand, I can't fumble it. He get hit, I get touchdown.